Good morning, good morning, good morning, traders. We are Wednesday, the 31st of July, 2024, last day of the month, and what a day it has been so far. Before we dive into everything, just remind you that it should be the last day today where you can get an assessment, take an assessment for the trader funding program and get a free 45-minute one-on-one session with our dear Blake Morrow. Take advantage of it. He's going to explain you how the TFP works, what the tips and tricks are, and the should be really a great help for those who are trying our TFP program. The only risk for you in there is your assessment fee, and once you decide to take part in the program, you will also gain some access to our chat room, which it has already been extremely lively, as you can imagine, today. So I'm just putting the link in our chat if you would be interested. I'm also going to put again, where is it, if I find it, the link to our NFP competition, where we again have a slew of great prizes. Let me just find it back. Here we go. And here is the link. So if you would put in your guesses, just make sure to only put guesses on that original post, all right? Guesses that people from our team are reposting on their own timelines will not be taken into account, okay? Only guesses to the original post will be taken into the account. That's it for the little announcements of the day, the bit of housekeeping. Right, before diving into the big one of the day, let's see what happened in the rest of the world. And there are some. Well, let's start with the unfortunate ones, right? I mean, unfortunate. I'm not taking any side. I'm not biased or anything. I mean, just because it had an impact on the markets. We had this attack in the Middle East where Israel, which has been confirmed afterwards, has killed the political Hamas leader, and also at the same time, since the Middle East tensions are definitely going up a notch again, the U.S. had to strike some places in Iran as a retaliation and protection for their own troops over there. So all of these had a bit of initial impact on risk, but basically the main ones benefiting from it, as I will have a look at it later, are the metals, and we are seeing a rebound now unfolding in the oils as well. Elsewhere in politics in the United States, it does look that Kamala Harris is making inroads on Trump in the election polls. So that's one that we are going to have to monitor as well, because we saw the market trade this Trump version 2.0 already for a bit, but perhaps this market will need to revise its stance a little bit. More on this a bit later, because there are more pressing issues today. We had a bit of a comment yesterday about the ECB lane as well, saying that the inflation is still a bit too sticky right now. So he's not really taking any side in regards to the ECB meeting in September, but he does say that he still sees inflation return to 2% in 2025, so that's further down the road. He still sees the inflation come down, and actually we did have a fair slew of inflation data coming out of Euroland this morning as well, and yesterday, as we saw with Germany. Then over to China. We have loads of comments from the officials. So they have been at first very, very vague about what they really wanted to do. But more and more officials are now popping up on the wires. The vice finance minister was out. The finance ministry, other finance ministry officials were also out saying that they will strengthen fiscal policy adjustment, deepen the fiscal and tax reforms. They will standardize the management of local governments, non-tax revenues. They will step up the fiscal policy implementation as well. They will issue special treasury bonds as well. And what we are seeing there, and I've been talking about this for a little bit already, is the fact that they start to really implement what likely had been discussed over the third plenum. We don't have full details yet, obviously, but they are putting stuff in place now. Also, putting a lot of money behind the technical or technology innovation, and things are seemingly moving. And I know, I mean, CNH has been moving on the back of the yen, of course, but it's also been moving on its own here, and we need to pay a little bit of attention. I think the investor market is now starting to kind of not saying completely buy what China is doing, but at least paying attention to everything that they do. The injections of money, trying to put everything back on the rails. It's going to take time, of course, but it is holding the investors back right now from selling more CNH, me included. I must say, for the time being, I'm really on the side. I want to see what they are doing and where it's going to lead them before making any decisions. In the meantime, PBOC, let me just quickly check where they fixed this. They fixed it at 713.46, so relatively unchanged compared to 713.64 yesterday. They are still perhaps on their path of saying like it's still everything is still okay, but are they winning some of the fight against the markets? It is possible if the investors, and I haven't read many of them, but if the investors start to buy what they are doing, it could be that we're in for a little bit more of CNH strength, and as I said, also perhaps on the back of what is happening on the yen today. Okay, running through a bit of data. Yesterday we had the housing numbers out. I hope you can all see my screen. I'm on the economic calendar. Just confirm, because since I haven't anyone else with me here to confirm, I'd like my audience to confirm. Yep, thank you, Bren. So we had a bit of housing data out, a little bit better than the expectations were, but we have seen. Then the one that I was really looking at, we had a pretty decent consumer confidence, but this is starting to look a bit ish on the actual prints, because we had a 100.4 print, as we can see on the last one, and it's been revised quite a bit lower, down to 97.8. I hope this is only a one-off, or this is not going to be a habit of this the consumer board there, or the consumer board. Because if we start to have the conference board, if we start to have revisions all the time, it's going to be very hard for us to judge what the consumer is really up to in the United States. And being one of the sides of the economy that Powell and the Fed are really looking very closely at, it would be better if we have like solid numbers to bank on. Furthermore, the jolts, not a lot. The balance between openings, quits, and stuff hasn't changed an awful lot. It didn't move the markets very much either. So moving on for that one, we will have the ADP today and a few more data. So let's run over those data that we have. And I will talk, of course, extensively about the Bank of Japan today, but I'm just going to run through everything right now. Also have a quick look at what is expected for the rest of the day. And then I'll talk specifically about what the Bank of Japan decided and especially what's being said afterwards. All right. We had a few data out, mixed bag there. One up, one down. We had the retail sales coming in a little better in what? No, sorry, that's Korea. I thought Japan. Oh, here, retail sales in Japan better than expected. Pretty decent number, around 3.7%. Small revision to the downside on the last one, but the problem is still around here somewhere, and that's those negative IP data. It's a very volatile number, okay? Expectations are what they are. They always usually expect relatively decent numbers for the next month, but it's a pretty volatile number. This one is still not great, but it has been completely overshadowed by what happened in on the Bank of Japan side, of course. Then we had a pretty big jump in the Kiwi business confidence number. That's a very big jump actually here. Also, the National Bank of New Zealand Loan Activity Index rose, and that was a bit half in contrast with what happened in Australia. But I think in Australia it's a bit of a I would say a bit of an oversized reaction to it. Yes, we have seen on some of the core numbers, we've seen a bit of a screw back here. But when we look at the headline numbers, they came out pretty much as expected, even a tad higher than the prior one, Q2. But then if you look at the retail sales were all right already in June as well. This is Q2 number as a whole, but we see a little bit of an uptick here in June. But then the market took those ones as a green light to scale back nearly completely on RBA rate hike expectations. That's a case of the pendulum swing again, right? I mean, the market went into expecting rate hikes from the RBA. As we have been talking so often on our shows, and as I've been saying, I mean, I don't think that any central bank really still want to hike, but that's what the market was pricing. Now we had a bit of a pendulum swing again, and the rate hikes have been taken off the table, and we have seen the Aussie come down quite substantially, actually, trading around 65.40. We went all the way down to 64.80 on the back of it. I do think it's a bit of a mix. It's not only due to what's happened in Australia and on that CPI as such, but also perhaps still some Aussie yen in there, still some perhaps the risk factor perhaps on in the markets, because we know that the commodity currencies are a bit of a risk environment as well, where when risk goes up and down, Aussies tends to move with it. And also, I still think that there were quite a few people positioned relatively long Aussie, and we've seen one that really has taken a big dive there is the Aussie Kiwi overnight. So I think people were still a bit positioned long there, and they got rinsed those positions. It's been a bit of a theme over the past week and a half, that a lot of risk-related or general risk positions have been wiped out pretty much. Chinese PMIs, mixed bag. Moving on, I don't think that was the big mover for the Chinese yuan. Bank of Japan coming back to it. Then we had the bit of German data here. Import prices ticking up slightly. Was expected to tick up a little bit. I don't think that had a major impact. Unemployment changed slightly higher than what was expected, but the unemployment rate remains the same. We do see a bit of a deteriorating employment picture over there. It's still just showing us that Germany is the weak sister of or the weak brother of in Europe, right? It is still not going pretty well there. French CPI coming down a tick versus expectations, but all in all, we can see that it ticked up like 0.1 versus the prior month. And then if you look at what happened on the Italian CPI, for instance, that ticked up as well. And as a result of it, and we saw the German CPI yesterday, of course, as a result of it, we see a sticky core in Europe and 0.1 higher in the headline CPI. Is it going to change anything for the ECB? No, I think this kind of sticky-ish picture is sort of as expected. I don't think it's changes much for the ECB expectations. We still have more data to come in before their September meeting. All right, and then really, oh yeah, we had a couple of Swiss data as well, and the Swiss data are still showing relatively weak numbers here. The zoo expectation number was at 9.4 versus the prior 17.5. That's relatively weak. And if I'm not mistaken, oh yeah, there were the reserves. Swiss has been strengthening a little bit back from low levels, from the lower levels as we saw. So this is just a reval. These official reserves numbers, I don't think there's anything to see there. These are just reval numbers. So once the dust settles on the Swiss franc, we can't rule out a bit more because it's following the yen as well. But I will still be looking at if and of course, I mean, some risk, Middle East geopolitical risk is also likely being traded in the Swiss franc. But I will be looking when the dust settles to perhaps enter some form of Swiss short positions. But for the time being, we need to get a few more things out of the way. And a few of those more things are, obviously, we have the ADP out this afternoon. Look at the employment cost index here as well. This is also always an interesting one to monitor. The Fed does as well, so we should too. Then we will have, for the Canadian watchers, it is a month delayed, right, versus the rest. I mean, this is even a May number. But what's the GDP? Because the Bank of Canada being slightly on the dovish side, we need to watch what's happening in the GDP data here for the next decision, perhaps for the Bank of Canada. If we would get like a bit of a sluggish to negative number here, the Canadian dollar, which is not gaining anything, let's face it, could get another slap around the ears. We will have some more housing data. We will also get the Chicago PMI, which is the first one of the PMIs in the States. It can be a mover, yes, but will it be a mover ahead of the FOMC today? I doubt it. At least it may be an algo mover, algo blip on the production of the data, but will it be a real mover? I kind of doubt it right now. And then the FOMC. Okay, and really I think so. They are not going to change the rates unless we get like an absolutely gigantic surprise. There is no change in rates. I mean, before we went into the blackdown period, all the speakers were sending us to September, and I still think that that is the case. I'm not going to say it's an autopilot meeting. We will probably have like those kind of comments again, which what Pavel already repeated several times, that they are now really watching the second part of the mandate, which is jobs. Okay, they wouldn't want the job market to deteriorate much further, because then that could be the trigger for a rate move. But that big job data is only coming out on Friday, right? So I don't think that they will move today, but slam the door wide open for a potential September cut. This is the base case. It's also the base case of the market. So I would argue, as I said already, that the bigger mover of the week may be the NFP and not today's FOMC. All right, the market will always move on an FOMC because it always does, and it will dissect every word of Powell because it always does. But do we pick a trend aside? I'm not sure about this. All right, so this for the FOMC later today. And now let's talk about our good friends at the Bank of Japan. Before I do, I'm just going to read through the initial comments. Kiwi. Okay, yeah, Ali, you're looking at the Kiwi, yeah. Kiwi has a really nice bounce, right? I think a lot has to do with the Aussie Kiwi as well. That the Kiwi bounced a bit, also coming from interesting levels. So yeah, in those 58s, there's a few really good levels there, right? In gold, yeah, I'll look at gold as well. Okay, Bank of Japan. This has to be said is the awakening of the inner hawk in Ueda. I can't remember really a Bank of Japan meeting which was more hawkish than the one that we had today. So not only did they hike the rates by the market was looking at 10 BPs. I've always said I think they will do 15, but they did the 15 BPs. We went up to, they qualify it as around 25 BPs now. It was a hawkish report on the interest rate side of things. Now, and let's go straight away to what happened in the dollar yen, because it's easier to. I'm going to go on to the shorter time frame as well, just to show the moves that we had on the Bank of Japan. So we had the announcement on the Bank of Japan, hike rates, okay, and from we were trading around where 152 3/4 or so before the announcement. We had that dip, that quick drop down to 151.5 on the announcement of the rate hike. I don't know why the market was so surprised, but it was surprised, and it was a hawkish rate hike. Let's call it that way. Then we had this immediate bounce here of about 200 points. And that is explained by the fact that they, and perhaps I should I take the Bank of Japan? I'm going to show you what the reason for the bounce that we saw. If I can just find it back. Where's their announcement here? No, that's the wrong one. I just want to show you a, here we are. I just want to show you this this little chart here. And this is the reason for the original bounce that we had in the dollar yen, because we have been talking about this being the kicker, right? The JGB scaling back of the JGB purchases, and there was a lot to do about how much they could do initially, and then they actually decided to do only 400 billion of reduction in the JGB purchases each quarter for the next 2 years to bring down the final in around April 2026. They will bring it down to actually sub 3 trillion, but it's the slope that the market took as an excuse to not buy yen at the time. But we have to say that overall, it is still going to be a quite sizable reduction, okay? But that was the initial reaction. They will review it in the middle of the road, or when they judge it needed. Okay, so and the whole thing will represent roughly a 7 to 8% decrease of the JGB holdings, which will still be a gigantic amount of money, right? So that was then the secondary reaction that we had. Then we came back to this is then we came back to around where we were before the Bank of Japan announcement, because they still hiked the rates, of course, and waiting for UEDA. And then we had a bit of a show there. And I'm going to have to scroll back into our chat room. And for those who are in our chat room, you can find all those headlines back in our newsroom, of course, because I've taken the I've put them all in there. And so then was the real hawkish bit. And Ueda, who has been a bit of a slow mover, now really went to the hawkish side. So he said that he doesn't believe that the economy and the prices will slow down due to an additional rate hike. We don't have 0.5 policy rate in mind. So that leaves the door open clearly for more rate hikes, okay? We judged the spring pay negotiation result as formally reflected, looking at the April-May wage data. So that is justifying the rate hike. And prices are getting to be more affected by foreign exchange swings compared to the past. I believe that wage hike moves will continue, and the consumption is relatively solid, and the momentum for wage growth is spreading at small and medium companies. That's the first bit. Then he said that rising wages and income will continue to support the private consumption. Then he also said that the upward pressure on JGB interest rates is not yet not so large. That's another one that tells us that they're ready to let the rates go higher a bit as well. And then he also said, and that's where we started to move away a little bit, that the weak yen didn't have much of an impact on our price outlook. So that's a bit of a step away. But he also said that as of now, Japanese rates are far below the uncertain levels of the neutral rate, okay? And that the major issue is where to stop raising rates when coming closer to neutral rates. So they are not there yet. And then he also said, yeah, that 0.25% rate is still extremely low. And if you think of real rates, it's profoundly negative. So everything there is very hawkish. He interjected a few less hawkish lines, saying that if the downward pressure in prices would require a rate cut, or if necessary, resumption of unconventional monetary policy would be possible. They also said, and that is one that he said relatively at the start of his press conference, that they rather would let the short end go than the long end, because they said if the long end yields really started to take off, they could do some fixed rate operations to cool down the jump in the longer end of the curve. So hence I'm saying that YCC is dead, but perhaps YCC is not completely dead. If they see the long end rising and where to, I don't have a view on that right now, but I could imagine we're talking about add another 25 BP hike, for instance, like a 10 and a 15 BPs or so. If the long end responds and we're going up to levels of around 1.5% in the 10 years, they may start to view this as going far enough. All right, so this is, but it requires time to find that one out. But overall, as I said, this is a very, very hawkish pressure. And as the press conference went on, we can see this dollar yen really, really, well, dollar yen, you name it. I mean, all the yen pairs really got hammered very, very hard. And of course, as a result of it, we have broken back under the 152 line now. which is a big level on where whatever chart we were looking at. We always said that this would be a big level. You also look at the daily here now. We've broken below the 200 DMA as well, which is around 151.60. There was another level here, which is the 50% of the 2024 rally in the dollar yen. We've broken below that as well. I couldn't even retest it on the small bounce that we saw like about an hour or so ago. So what's next? Well, I mean, this market is turning now, right? So we have end of month to come, and some of the models are calling for more yen buying at the end of the month. So keep the clock at hand. Keep the some of those rates at hand as well. The 151.10, 151.60, 152 should already on bounces start to show up right now. But if we see more yen buying on this afternoon fixing, we could actually see a move under 150. 150 is always going to be a bit psychologic, but we are now getting close to a more medium trend line here. This is from early 2023 when we had the post 2022 interventions, the move down on the back of the big move down on the back of the US CPI coming down. Then those bounces that we had, and the last one was at the end of 2023, where we were trading on the trend line right at the end of the of 2023, and we started the last big leg higher on the dollar yen here. It's 150 points. Well, call it 200 points away. It's 200 points away, but it's the yen, right? And looking at how much we done 155 down to 100 and close to 150. We've done 5 big figures here. Those extra 150, 200 points would be possible, I think. You know, if the market really hooks on to this is it. Bank of Japan is hawkish. The rest of the yield sphere is coming down. That is another one to note. Okay, the rest of the yields are coming down. I'll show you those yields in the dollar, in the euro, sterling, and Aussie, of course, overnight. All those yields are coming down. So this is also helping the yen. It is possible that we see a test here, okay? So this is the 61.8 of that move that we had in 2024. And then below here, we are starting to run into more longer-term levels here, around 147.5. Then we could see 146, 145, 90, 146. There's going to be levels, big levels down there, but I think the big test will be if we get down to 148.5. Okay, I think a lot of positions are being reversed now. We will have to look at what happens on the month end, and then what happens after the FOMC. Okay, the FOMC is also going to guide us in what is going to happen on all dollars. As I said, I'm not expecting it to be a huge meeting as such, but we can't ignore it because of what has just been happening. All right, and then also tomorrow, but I'll talk about that tomorrow. We will have the Bank of England. All right. Okay, so this for the yen. What happened in the other yen pairs? Well, no surprise, right? They're all got a gigantic slap. Remember this very long-term trend line that we were looking at in Kiwi yen in 2023. We had we tried, then we really tried, and then we went up. We are bang on it again. So this is another one that shows where the importance of those yen moves and the levels that we are getting to in the yen. Okay, so this long-term Kiwi yen, we are trading on it. If you look at Euro yen as well, we've broken through that 164 low 164s now, which is also the 200 DMA. We have broken below, so keep an eye on if ever this bounces back to around 164. Keep an eye on what's happening in euro yen as well. I think right now, looking at how hawkish it was, looking at how the market reacts, I would be surprised if we straight away start to go back higher. That would be a real surprise. So I think that for the time being, if we get bounces in stuff, we are going to find rally sellers still, because it looks like the market is a bit traumatized by this Bank of Japan meeting and the hawkishness that especially Ueda showed. Okay. Where can we go to next? 160, right? 160 is going to be a bit of a psychological level, and it's also our March level here, and it's going to be, let me kill those, hide those a bit. It's also going to be a bit of a intermediate level here. This low, also a few fibs around there. Hi, Angela. If you look at the longer term trend line, it's not as violent as the dollar yen, but it's just different. Longer term, 158, 157 and a half, 158. There's going to be stuff to be watched if we get more downside. That needs to be for that we need to break 161 and 160. Okay. On sterling yen, and that's going to be an interesting one into tomorrow, of course. This is now breaking already this support here. It's a bit steeper. It was a much steeper channel than the euro yen one, if you remember. We are breaking below, but we are trading around the around the 50% of it's actually below now again. We are around the 50% or just below now of the 2024 move. So there's still, even though we broke below, and I do think that ahead of the Bank of England especially, I don't think that we will find rally sellers here, because there is this uncertainty surrounding the Bank of England tomorrow, right? They could actually, although GDP doesn't support a cut, but they actually could, if they want, before the summer, come up with a little bit of cut. So I think if you get any bounces, serious bounces on sterling yen, you may find some sellers. By the way, hat off to Marcus, who sold sterling yen right after the spike that we saw on the Bank of Japan announcement. So really, really well done on that one, Marcus. Where can we go next? 191.30. No, 191.60 is where the 200 DMA lies. But I think here, and that's still a while away, but being the yen being so volatile, I think around here, 188, 187 and a half, 188 and a half is going to be really very, very important on the sterling yen. And that may be in case we do get that rate cut tomorrow from the Bank of England, which I'm, by the way, not calling. I'm really 50-50 on the Bank of England. I really don't know what they decide to do. Bailey could eventually move over to the dovish side because he probably is dying for a cut, but I'm not going to make the call. Well, what else? Oh yeah, Aussie yen is also an interesting one, because here, look at this is the 2020 trend line. It's only a 2-point trend line, okay? So I mean, don't kill the messenger here, or don't kill the technician. I don't pretend to be the finest technician, but look where we are. We're trading 97.60s at the moment. 97.60.70 is where the trend line comes in. 97.70 is the 50% of the move that we saw after the correction here from 2023, the big move higher of the commodities versus the yen, when that started in March 2023. So we are on the 50% here. It has been a level of interest in the past, so keep an eye on what's happening around these 97, 60, 70. If really it goes lower, you're probably talking about levels, and this could be because look, I'm on dailies, right? I mean, I don't think it's very useful to look at really short-term stuff right now. I think the dailies are helping us a bit more than really what the short term is showing. Get a bounce. You know, I told you about the 100 psychological level. It is a while away, but we do have yen. The yen is volatile. Okay, I think first time around, if we would get a retest of 100, just above, we should probably find sellers up there, right? That would be my expectation now. You get a break and a close below. Yeah, what is going to prevent it from going to have a test 95? And then we are coming into a very big traffic zone here. Of course, it's a very big zone, but the yen is moving a lot. So I'm not going to rule out anything. Now, and that's my final word on the Bank of Japan. And I'm going to be just slightly controversial, perhaps here with what is going on and what is happening. We did get a rate hike. We have a gradual scaling back of the JGB program. We have had the most hawkish UEDA that we can imagine, and the market has responded to it. Now, remains to be seen now how those economic data in Japan are going to evolve, because they are still, we did get very good wage hikes because the companies had been forced to do so. But again, I'm still saying that the Bank of Japan is not going to hike rates up to 1%, for instance, because they are still very worried about the the government's finances and those finances. And that is what they already told us. If you look at the 10-year JGB, it is still relatively quiet, because the Bank of Japan has also told us that they are ready to step in with fixed programs to buy JGBs if the yields would run away. The one where I think, and I don't know, perhaps I should go on a line chart or so, but you can see we had a jump in the short end, and I think that one is probably going to stay up there unless we get weakening data, and that's where I think if we still get those weak-ish data, or those very anemic or erratic data in Japan, if I see those really this washout of all those yen pairs, and here, for instance, I might not do any cash, but I'll be looking at perhaps starting to put back on options or so, rather to the top side of stuff. I want to see what's happening on the end of month. I want to see what's happening with the FOMC. I want to see especially what's happening on the NFP. And I haven't taken out my butcher's glove yet out of the drawer to catch knives. It's still far too dangerous, early, and fast for the time being. And I want to see what the market is doing. But I'm starting slowly to have a look at things, and perhaps make a decision next week or towards the end of the week. Michael, you're absolutely right. That's the other thing that we have to look at, and we can see that all the yields, because people are always talking about the US yields, and yes, US yields are going down, but look at what the German yields are doing. They are going down as well. We look at the tens. Okay, let me look at a closer one. Look at the tens. Yes, we are well under 420 now on the US yields. We are well below there. But then on the other hand, and of course the US is the biggest market, and Michael, you're right to point it out. US yields are on the defensive. But then look at stuff ex yen, ex Swiss, ex CNH. Have I forgotten any? Yeah, and then the EM pairs, like the rand makes they're living their own life. But look at the majors, ex those that I just mentioned, they're all coming down. Okay, Euro 10-year coming down, Germany coming down. Have a look at what's happening in the gilt yields coming down. Okay, and then look at and I always like to look at the differentials. They are not going up in favor of the euro right now, right? I mean, they're actually still widening a little bit. I don't think the FOMC is going to change much in that respect. We may see a few blips here and there because I do think Powell is going to open September, but well, okay, Michael. Michael says feels like 2007, 2008. That's a global financial crisis. Are we in crisis mode right now? We could be if that, but I think it's not going to be because of some bond packaging or stuff. Although people are still watching at the KRE and things, but you know what? My feeling on this is that geopolitics are probably still a bit underpriced, and therefore, I also think that moving on from those yield differentials, as you can see, they are not moving much, or even, and specifically not moving against the dollar. I think this one, for instance, maybe still the expression of lower yields elsewhere and the combination of geopolitics. I do think, not going to say that we are on our way to fresh highs, but I am not bullish gold or bearish gold right now. Okay, we had the washout on when it was like a move of get me out of everything, right? We had this washout, but I think we could trade higher here again in gold, especially if we would get an extra little push lower on the yields, thanks to the FOMC, when Powell will open the door to September. And I think then people will continue to buy this. I think around 24, 23, where I started to buy it the other day, around here, 23.80s should already be support right now, and especially here in the mid 23s. I do think that we are going to find support. So I don't agree with people who think that metals are going to trade lower right now, especially not the shiny stuff. Okay, that's it for today. I think we've run through a lot of things. I'd say be very, very careful of what's going on in yen. It may not be it may not be over there because the state still has to come in. End of month still have to be done. We have the last fixing in about 4.5 hours from now. So be a bit careful with what you do on the yen right now. Mainly, probably it's going to be a sell on rallies in all yen pairs still, and then see what happens once 4 o'clock comes around. Have a great day. Trade safely on the FOMC. Don't do anything stupid on the yen either. And we talk to each other tomorrow again. Thanks for being with me, all of you.